Good morning, all. I am Dr. Gitanjali Bhatt Sharma from Uttarakhand Open University, working as an assistant professor in the Department of Management Studies and Commerce. In the last session, we learned the concept of financial inclusion, and in this session, we're going to learn about the digital banking, payment system, and investment platforms. Now, the topics we will cover in this lecture are the concept of digital banking, evolution of digital banking, the components of digital banking, types of digital banking services, its benefits, and challenges of digital banking. So, first of all, we will start with what is digital banking. So, digital banking is basically the use of digital technology to deliver banking products and services to customers. It encompasses a broad range of online, mobile, and electronic services that enable individuals and businessmen to access and manage their financial accounts and transactions without the need to visit a physical bank branch. So, learners, digital banking is the use of electronic channels, platforms, and technology to conduct various banking activities as well as services. The feature of digital banking encompasses a wide range of capabilities that enhance convenience, accessibility, and efficiency for customers as well as financial institutions. Now, let's move on to the evolution of digital banking, from where the digital banking starts. So, the first of all, there was traditional banking. Traditional banking came before 1980, where the banking was completely manual. The customers visited branches for all their transactions. Passbook, checkbooks, and ledgers were maintained physically. After that, the era of computer came, where the introduction of computer came in 1980s, where banks started using computers internally. The record keeping system becomes very faster and more accurate. There were no direct digital access for customers yet. Now, when the concept of core banking system start in the year 1990s, it has been introduced where the centralized banking services arises. There, the customer could access their accounts from any branch. ATM cards and basic electronic fund transfer become common. After that, the era of internet banking came in the late 1990s and early 2000, where bank launches online banking websites. In this era, the customer could check balances, transfer funds, and pay bills online. And this is the beginning of 24 into 7 banking services. After that, mobile banking came in 2010, where banking apps become very popular. Mobile based transactions, UPIs, IMPS has been emerged, and services included account management, fund transfer, and customer support. After that, the concept of digital online bank came, which is neobank, from 2015 onwards, where fully digital banks without physical branches exist. The operations through mobile apps and web platforms has been prevailing. The examples of digital only banks, neobanks, can be Neo, Jupiter, which is prevailing in India. After the era came, the era is integration with fintech and AI, which has been nowadays very popular in the recent years. Here, the chatbots, robo advisors, and AI based fraud detection has been introduced. Open banking allows the third party to offer banking services. In the recent years, digital wallets and payment system like Paytm, PhonePe, Google Pay has been become mainstream. So, now let's come to the components of digital banking. What are the components of digital banking? The first component is core banking system, CBS. This is a very centralized system that enables customers to conduct banking transactions from any branch or digital platform. It ensures a real time data processing and integration across services like deposits, loan, and payments. Second is digital channel. Digital channel means this includes mobile apps, internet banking, and USSD platform that provide convenient 24 into 7 banking access to the customers nowadays. Now, next is digital payment system. Digital payment systems like UPI, NEFT, IMPS, wallets, and POS machines allow a very secure and very fast electronic payment fund transfer. Now, the another component is customer relationship management, which is CRM. This is a very important tool to manage customer data, preferences, and interactions, helping banks offer personalized services, and it also helps in improving their satisfaction. Now, there is cybersecurity infrastructure. Cybersecurity infrastructure basically includes firewalls, encryptions, multi-factor authentication, and fraud detection tools, which enables to protect the customer data and financial transactions. There is one more component, compliance and regulatory system. The system ensures that all banking operations follow the RBI, Reserve Bank of India, and other regulatory guidelines through a automated KYC checks and audit trails. Now, one of the most important component is cloud computing and infrastructure, which is also very popular. This provides a scalable and very cost-effective, secure digital infrastructures to store data and run the banking applications in an efficient manner. Another component is chatbots, and there are virtual assistants. Now, in the era of AI, the AI powered tools help customers with very instant query resolution, balance check, they can easily check their balance, and service request, and transactions help is available 24 hours. Now, these were the components. Now, let's discuss the types of digital banking services. So, the types of digital banking services, the first one is mobile banking. Everyone is aware about the mobile banking nowadays. So the mobile banking enable customers to access banking services through a smartphone app, and the users can check account balances, they can easily transfer funds, they can even pay their utility bill or any recharge their mobile, and can request a mini statement. It offers very convenience, 24 hours accessibility without visiting the banks. Next is internet banking. Internet banking is accessible to banking services through a bank's official website using a computer or any mobile browser. This offers account management, fund transfer through NEFT, RTGS, IMPS, and it helps in fixed deposit opening also, helps in the utility and tax payment. But one thing is important, that it requires their login credentials. So the customer needs their login credentials, that means username as well as password to access the internet banking. Next one is ATM and card services. ATM and card services includes the use of ATMs. Everybody is having ATM nowadays, automated teller machines for cash withdrawal, balance inquiry, and even if you want any mini statement. And there is both type of debit credit cards for in-store and online purchase. Point of sale terminals, which have been used by merchants to accept card payments. Another type is UPI and digital wallet. UPI, Unified Payment Interface. Everyone is familiar about this, which allows instant bank-to-bank transfers using mobile apps like Bheem, Google Pay or Phone Pay with a simple UPI ID. Digital wallets such as Paytm store money digitally, and even they're used for very quick payment at stores, online shopping, and bill payments. Another is electronic fund transfer, EFT. EFT enables online transfer of funds between bank accounts using system like NEFT, National Electronic Fund Transfer, RTGS, which stands for Real Time Gross Settlement, and IMPS. IMPS is Immediate Payment Services. So these methods are very secure, they are very reliable, and widely has been used for both the personal as well as for any business transactions. Now, moving on to the benefits of digital banking. What are the benefits of digital banking? So, the first benefit of digital banking is rise in financial inclusion, very important part. So, digital banking makes the banking services very accessible to people who are living in the remote or rural areas, and they are deprived of any banking facilities. So, through mobile banking, UPI and digital wallet, even the individuals without physical bank branches nearby they can participate in the financial system, and this will empowers more people to save, they can invest and access credit, promoting the very inclusive economic growth. Next benefit is faster transactions. So we all know that with the digital platforms, financial transactions such as money transfer, bill payments, and loan applications can be completed in seconds, or it can be completed in minutes. Services like UPI, IMPS, NEFT, I have already told you that this enabled very real time or same day processing, improving the user experience, and it also make efficiency for both the individuals as well as for the businesses. This is also beneficial for reducing the operational cost. When we talk about the operational cost, digital banking reduces the need for physical infrastructure like bank branches and paper based processes. So, this lowers cost for banks in staffing, documentation, and maintenance. For customers, many digital services are offered at very low, or we can say with no fee, making the banking more affordable. Still, with the benefits, apart with the benefits, there are still some challenges in the digital banking. So what are the challenges in the digital banking? So the first challenge is about the cyber security risk, which is arising day by day. So the digital banking platforms are very vulnerable to cyber threats like phishing, hacking, and data breaches, malware attacks. If not properly secured, there are sensitive customer information and financial data can be compromised. Ensuring robust encryption, regular security updates, and user awareness is very essential to minimize these risks. Second is digital literacy barriers are also there, that many people, especially who are living in the rural areas, or they are very deprived of the services, so they lack the necessary digital skills to use these online banking services in a efficient manner. This will limit their ability to benefit from digital financial tools, and educating users and providing user friendly platforms are very important or crucial for the inclusive digital banking. Now there is one more challenge, that is infrastructure limitations. In many areas we see that, especially in the rural and the remote regions, access to reliable internet or any smartphone power supply is still remaining very limited. So these infrastructure gap hinders smooth digital banking operations, and they may also prevent many from fully utilizing these services. So this is all about the banking services. In the next lecture we will discuss about the payment system and what are the investment platforms. Thank you.